Hey everybody, welcome back to the Green Chutes Podcast. Here, myself, Paul, and Walt. Today we've got another interesting topic to talk about, and it's talking. The president and some in the administration have talked about a quote-unquote housing emergency. So basically, there's a lot of people who still want to buy a house. They want to get into a house, but the mortgage rates are currently high and housing prices are currently high. So there's questions as to how the administration is going to address that. So we've got a couple of articles here that I pulled up. I'll share on the screen here in a little bit. But something that we're going to look at in this podcast and talk about and see what our thoughts are on how the impact will be especially for the first time home buyers who are in a lot of cases are priced out. So what kind of I guess to start that off, Walt, what kind of mortgage rates are you seeing these days?
So I'd say now we're in the mid to low sixes
Okay.
for home purchases. On FHA and VA deals, maybe even a little bit lower than that. So we've had a nice little bit of time here where we've had some more breathing room, and it's given a little bit more of an affordability boost for people with rates just a little bit lower. And obviously that could change this week. They could go up, they could go down. One thing that I think is most likely as far as a housing emergency, as the Secretary of the Treasury has spoken about, or basically put out there as a flag. I do anticipate the Federal Reserve purchasing more mortgage-backed securities, and that would lower interest rates. And I think that's most likely to happen because they've already done that. And then that goes to the flip side of the coin as far as if we have low interest rates again, what does that do to affordability? What does that do to the greater issue of inflation? But yeah, so I think that interest rates could change this week. I don't know if they could go up or down, but I think given a lot of the stuff happening in the United States with uncertainty, the bond market and investors in different places might not look at the United States as friendly and as safe of a place if we can't get our act together as far as a nation, and how we deal with one another and how we um, dispense justice. So
Yeah.
I don't know what the long term outlook would necessarily be, but I just think that if somebody is looking at the numbers and it makes sense now, I can get this now and I can afford this. Given the worst case, if the worst case were to happen, then they should proceed with the deal. And people need places to live, and we're really, truthfully privileged in this country to have programs where people can put 1%, 0%, 3%, 3.5% down. The most of the world, you're not going to enter the game until you have 20, 25% period,
And you're
or
not
more.
getting a and you're not getting a 30-year fixed mortgage rate in
Very
most of
true.
the
So
world.
your payment is a lot higher. And then the rules, I'm sure, are very similar. Where if you miss a payment or if you default, right, you lose your asset. So,
Yeah. Yes.
but yeah, in Russia, for example, it's 50% loan to value
Okay.
is like the best terms you're going to get on a loan. So you literally need to anticipate certain places in the world they pay in cash, or the loan terms are very unfavorable. And I think it's our bond market that allows our mortgages to be as favorable to normal working class people as they are.
Yeah. Yeah.
So
And stepping back a few too. I mean, there's with regards to the mortgage-backed security, there's this questionability that whether it's legal or not. I mean, obviously the Federal Reserve has done a number of things. They bought private corporate bonds and stuff, and so there's questions as to the legality of that. They obviously did it. Nobody's heads have rolled. But we'll talk a little bit. That was one of the articles I was going to share here. Let me pull it up here.
see, I was going to make a joke and say who would audit them, like like,
Can you see the screen here? Can you see what I'm sharing?
yes, sir.
Okay. So yeah, even right here, basically it's called the MBS team at Bank of America. So here's the headline article. Bank of America sees path to 5% mortgage rate if the Fed pulls off these two things. Of course, their team is called the Mortgage-Backed Security Research Team, so you can kind of guess what they want. But here they mention of the two actions, quantitative easing in mortgage-backed securities and aggressive yield curve control. So basically, they want to go back to they want to have the Fed buy those mortgage-backed securities. And so what those mortgage-backed securities are basically, as banks or other lenders who specialize in mortgage, they issue those mortgages. Buyer gets a home, so those mortgages get packed up into almost like imagine like a shipping container, and you've got a bunch of different little boxes that you put in the shipping container. So each mortgage is considered those one little box, and they're putting it into that shipping container. So that shipping container then has suddenly, let's say for example, 100 boxes in there. So each mortgage represents one box. So then that shipping container, then large outfits, large entities like pension funds, school districts, other places, private equity that want to earn a yield, they will go and buy that package, so to speak, that entire shipping container, because they want the income that's coming off of those mortgages. So that's kind of the quick and dirty explanation for it. Obviously, there's a lot more legal involved in terms of how they rate it and how in terms of they package it. But basically, they're packaging up a number of mortgages and then selling it off. So it becomes a security in and of itself, selling it off to other investors. In this case, in the past, what the Federal Reserve was doing is they were actually buying these mortgage-backed securities, and that kind of helped a lot of these lenders to offer mortgages, but and indirectly also lowered the mortgage interest rate because they're kind of putting a backstop on it. When there's less chance that the lender is going to be able to sell their mortgage forward, they're going to charge higher rates because they need to get their returns. But if somebody's already guaranteeing, say, I'm going to buy your mortgage regardless of whatever the situation may be, then that entity, that bank, that lender, whatever, they can charge a lower interest rate because they're going to be guaranteed that they can get it off their books and then make another loan. So that's what it is, and that's what looks like the Bank of America is asking for. And whether I think it will lower interest rates, but whether that improves affordability is a whole different story too. And if there's a lot of people sitting on the sidelines waiting and they don't necessarily need the prices to go down, but the interest rates go down enough for them, they'll start jumping in. That still prices out a lot of people who, for both, even with a couple percent rate cut, current prices, current not only current prices but current insurance and current taxes, they're still priced out of the housing market.
And I think that's the bigger problem. Is truly what I could foresee happening, and being in the industry for a long time. And I have a lot of people that were, they're second time home buyers or first time home buyers, and they're coming in now, and they're looking around, and we've quoted interest rates, and they're hearing this about the Federal Reserve lowering interest rates or doing purchases of mortgage backed securities potentially. And what you have to realize is, and I told this to Gene, or showed it to Gene in the numbers, that really, so let's say interest rates lower a little bit, that is going to trigger a lot more people to enter the market. And then all of a sudden, any reprieve you would have had, for cost savings you would have had from the lower rate, it just goes into those assets. And so now something that you could have got at, you weren't in competition for, now it's you and two other buyers, because they've come into the market, they see that interest rates are lower, and you really want the house, so you're going to go 20,000 over. And that 20,000, that plays into how much you finance as well. So you tend to finance more given that situation, and you don't really have the benefit of affordability.
Yeah,
So yeah, I could see that happening in a great deal of markets. Um, one thing I think, as far as a true housing emergency, is really allowing, how do you get people into homes, or help people get homes that are, when we have a man shortage as far as contractors and people that build and people that can rehab, because I still think that that's a huge area where the American economy needs more people to rehab more homes. And someone has lived in a home for 20, 30 years, and the last few years of their life they haven't upkept it, but it's in a nice neighborhood, and now they're selling it, and so there's always opportunity regardless of where interest rates go or what happens. Um, and so yeah, I think there is an emergency though, because we're finding now that a lot of people with good jobs and good credit, given everything going on, they can't find anything that they could hold on to, or take and keep for a long time.
Yeah.
So.
Yeah, I'm gonna go back to and share. Let me share my screen here again. So here's a. This is from wolfstreet.com. So this is an interesting factoid that I found here. It's vacant homes for vacant for other reasons. 12 million homes. So as you can see here, I mean these are the total numbers. They're talking about owner-occupied homes, homes owned by landlords, and vacant for rent. So you're close to looking at around 140, 150 million, but you've got 12 million homes that are vacant. That goes back to our conversation in a previous podcast about treating a home as an investment. So when you have a home and the value only goes up, then you have a reason to hold it. I can sit on a vacant home and just let it appreciate. One of the problems though is, even though it's technically appreciating in a sense, if you're not maintaining it, it's actually starting to depreciate depending on the condition of the house. I mean, if you shut everything down, you've winterized it, waterproofed it, shut the water off so there's no water issues, yeah, then the home might be fine. But as we know, most homes need proper ventilation. In the hot summer days in our area here, if you're not running your air conditioning, it gets humid inside the house. That causes issue. In the wintertime, if you're not, if you didn't winterize it, and in the wintertime you get freezing temperatures, then you're going to get pipe bursts, and that causes other issues. So with 12 million vacant homes, that's another thing is, you know, maybe the mortgage-backed securities isn't something that's needed. Maybe just start incentivizing these homeowners to say, hey, get these homes on the market, either whether through penalty, if you're sitting on a vacant house, it's not being used, we're going to charge you a tax. Vancouver, I think, did that a couple of years ago. I think they did it in a smaller amount than they originally hoped, so I don't know how much of an impact it has. But similarly, over here, you could do that over here. Even localities can do that, increase the tax on, if it's a vacant house, or even if it's on a single family, you could even increase taxes too. Like if it's a single family primary residence, you get a low tax rate. But if you're buying a second single family house as an investment, Airbnb and whatnot, you can increase the tax that way. But that's a different strategy and different way to approach it. Yeah, I think if you start pushing some of those vacant properties out there, get that inventory out there, that in itself will also help reduce the pricing of houses.
And I'll tell you, so a true deal story. And obviously, I won't never mention the clients or where it is, but we'll just say it's in a city in Ohio. And the client was looking at purchasing from the city a commercial mixed use property. So you'll see these, and whenever I look at, or somebody tells me about a commercial mixed use property, I immediately think of, like, oh no, right? Like, right, Paul. Like, it's almost just like they're difficult to finance. This one needed a lot of work. Well, as a condition of buying this property, which, as an initial investment, it needed a ton of work. It wasn't. It's something that a lot of people could potentially use their 401k and acquire, but it again needed a lot of work, and the city would not allow the deal to go through unless the client had a total loan commitment for the 350,000 in work to get it to what the city would deem to be appropriate. Well, the issue with that is just when you're looking at commercial mixed use properties, or when these kind of fix, there's not a lot of fix and flip, loan programs out there. So we deal, try to find good people that are in the hard money world, or good people, that I know that can maybe facilitate or help make some connections to make something like this happen. But that is something where these municipalities need to make it easier, or need to use common sense, because again, this is a person that's has a great job, a professional. Like, why wouldn't they be able to just pay cash for this investment, buy it, and then over time they can, put their own money into it, repair it, get it to where, now they can rent out the first floor, and after a few years, a couple people, they can rent out the top floors. And it's laziness and unprofessionalism, in a lot of these municipalities, that are the reason they look the way they do. And I hate to say that, but you guys got to look in a mirror, right? Like, some of these cities and some of these people, as far as what they're doing, and how they're not using common sense to make their cities better.
Yeah, there's a lot of red tape, not in terms of new building, but in terms of is good. Excuse me, existing properties. So you've got, there can be heavy permitting process. It can be expensive. So even for somebody in some of these cities, okay, they want to, rehab the house. If they're not doing it by the book, they come around, they fix it up. I've had a situation like that with a local client here as well too, not naming names, but just in this area. He did a great job. He fixed it up. He didn't realize at the time, and the title company didn't catch it, unfortunately, that there was a condemnation order on the property. So he had fixed it up. He ran all the plumbing. He did everything. He had brought tenants in. The city came by and said, "Hey, you can't be living in there." And then even you go in there, I walked through the property after it was fixed up. It was, this guy is like a grade contractor, and he did everything, interior by the book. And I would have lived in there if it were me. If I had the, if I needed an apartment and he was showing it to me, that's how nice it looked. I was like, I would have lived in there. But the city said, no, you didn't do the permit process. You didn't clear it from the condemnation, didn't pay whoever's money needed to be paid. And so they forced him to kick all the tenants out. After that, he was kind of, upset at the process. He's like, yeah, just sell the property for me. I don't want to deal with this headache anymore. I mean, he was providing, it was a duplex building. So he was providing housing, affordable housing too, for two families. And basically they had to go find new places because of the city process over there.
I'd lose my mind. I'd be like, I would be screaming on the phone to somebody, Paul. But yeah, really need to make some sort of process to make it so it's common sense. And if this is a licensed contractor carrying the appropriate insurance, they could have done a reinspection and looked at it, right? Or whoever that probably retired guy was collecting a fat paycheck, right? Pull him back out there to look at it, and basically make sure that it's safe and it's all right.
Yeah,
Um,
that's
you
what
know,
they should do.
I
But since he didn't do the permits in the first place, then it was, somebody stepped on the administrator's toes, and so they were upset over that. It's like, oh, we can't let that happen.
see, and that's why it's kind of weird, because like Catherine had is working a deal. The first time we've ever seen a municipality require an occupancy certification on every purchase. So apparently that's a thing now too, where no matter where the home is, or like in this municipality, you have to pay, I think it was $60 or whatever it was, to have an inspector go out and make sure that the property is still livable. So, but I think that is, I don't know. That's something in certain, that maybe some municipalities, right, with a lot of issues, could benefit from. At the same time, I was surprised it took as fast as it did, because that was the original. My concern is always like, well, if this gets in the way of closing and we have to extend an interest rate lock, then it's not fun for us, and it's not fun for the client. So
And for
yeah.
some of for some of that too, I mean, know as well as I do. I mean, regardless of if it's a conventional mortgage, if it's an FHA, VA, the appraisers are going out there in most cases. They're going to look at the house. Now, there may be certain situations where I've had a recent situation where they put enough down, so then on a conventional, they just did a what I think you call it a desktop appraisal, So they didn't go visit the property, but there was enough pictures online that you could see, okay, this house is livable. In this case, my buyer, and she was buying with her family members. They were savvy enough, so they went in. They were fine with the condition too. There was one minor issue with the room, but the son-in-law was like, "I'll take care of that. I'll bang that out pretty quick." But if you go and have like an occupancy inspection by the local municipality, depending on the location. Like if it were my other client over there, and they went and looked at it, even though it's picture perfect, it's like, no, sorry, this was condemned. You need to kick out everybody over there, or you can't live in there. So they stalled the deal. So it is, it can help, but at the same time too, there's other processes going on. I mean, in a
Right.
lot of cases too, it's like, if that's the case, okay, that's what you want to do. Maybe you want to protect some people who aren't as savvy. I understand that. Save the process, save the step for that person. If they go get a home inspection, like here in Ohio and in Kentucky, you have to be a licensed home inspector. If they get a home inspection from a licensed home inspector, just say, give me that inspection, give me a copy of it. If it's 75% is green and maybe a couple minor red things that are not fun, not big issues, sign off on it and move it forward. Why are we having standing in the way and having people physically go and delay the process? Like you mentioned, somebody might be losing a rate lock, especially these days too. Rates can jump up pretty quick, and that can change the affordability factor for many people.
Absolutely. And what you said too, as far as appraisal. So there's desktop appraisals, and like a lot of times for home equity loans, they'll use those. Like kind of more a more electronic appraisal, like you said. But there's also waivers to where, keep in mind that so much mortgage volume runs through Freddie and Fannie that when we're running automated underwriting, if a loan has, if a deal has a borrower that has a middle credit score that's higher, and they have income and they have assets, and really it's contingent on loan to value as well as loan purpose. But like, so normally if you're doing a cash out refinance, they will come and do an inspection, and physically an appraisal will come in, and part of that appraiser's responsibilities are any sort of safety issue or potential anything that could harm or hurt somebody, or harm the value of the property for the bank. They are required to call it out, and they do. So yeah, there's multiple processes going on that would protect people. And I think when you add in these other things, I think there is a lot of red tape and a lot of, we'll just call it corruption, for lack of a better word, that gets in the way of affordable housing in America. So those individuals had, you were referring to the people that were tenants and were, wow, this is a great place and I'm happy here and I have my family here, and now they're thrown out. When somebody that had all the licenses and had all the training and had all the expertise to fix the problem, but we have bureaucrats that need to be appeased, and quite frankly, that's un-American, I think, Paul.
Yeah.
But yeah.
Yeah. So another thing talked about too, with regards to this housing emergencies, I was looking at reading an article talked about first time home buyer credit, which you've had those in the past, and there have been grants too at the local level. I know Ohio's offered them in the past. I think some of them were based on income, some of them were based on location. So they vary state by state. But even with that too, I think you had talked a little bit about it earlier too. You start offering that free money, but then that just kind of that bids the price of the housing up as it is, because now everybody's playing with an extra $10,000. That means, okay, I can bid up an extra $10,000 on this home, not feel necessarily to feel the pinch of that. But if every buyer is doing that, then that's just going to chase the prices up. It's not really helping people as much as say it as their intended effect is to help first time buyers get into homes easier.
I think that would be something more long term that could have, a long term positive effect if you're going to incentivize it from that route. But it's nothing that would be immediate. And I
Yeah.
think that the reality is that they're going to do something immediate, which I would think would be, hey, we're going to buy mortgage-backed securities, or and I'm not sure what the politics behind the scenes would be, but one thing that was mentioned in the one article was reducing mortgage insurance. So if you reduce the mortgage insurance factor on FHA, for example, you would have more people moving into that loan product, right, at 3.5% down as a minimum, and more people that maybe the interest rate isn't lower, but your actual payment is lower because your factor on your mortgage insurance has been reduced by policy. And so I think that's one thing that they could look at, because essentially the consumer is paying for it. And one thing I've heard a lot about or read a lot about recently is what was happening during COVID with some of these government loans, and how people were pushing the payments to the back and the government was still paying the lenders. So it's like, ultimately, why is the consumer paying this insurance? Right, like who is this insurance going toward? I remember, right, on the private mortgage insurance side, there's only a few companies, and I remember meeting these guys when I worked at the big banks and being like, that's a great job, because I think that they just kind of drive around, and you have to have it if you don't put 20% down, and the bank pretty much tells you what vendor you're going to use. It can only be one of like two or three.
Yeah.
So like it's essentially another monopoly, that I think needs to be looked at. And maybe I don't know if there's going to have the stomach to look at that, because it'll hurt bankers, and we know they don't like to do that. So yeah,
Yeah, there's been a lot of consolidation in the industry, and that's also hurt a lot of people. Consolidation in lenders, consolidation in some of these big tech companies, and so that's putting pressure on everything. Things have kind of been slanted. When you get those, excuse me, you get those large builders, then it's harder for the smaller builders to compete. Usually, especially when on the, they're trying to build affordable homes. A large builder can come and do that. They can throw up a bunch of stick-built homes pretty quick. They've got all the crews, so the smaller builders kind of get priced out. Those who can't do it, they just kind of go back. They become the crews, and the other builders who do withstand the time, they're usually just building those pretty expensive homes, those fancy homes that where they're getting enough profit and they can keep their crews busy, but they only need to throw up a couple houses a year, and they've made their money for the year and do that year after year. They're fine with that. But as long as these huge builders consolidating, kind of padding the laws, padding the politicians, and going in a certain direction, that they control the market. So that I think that also kind of plays into things too. We don't necessarily have a true capitalist system, and regulation being part of it, and then just this control, this consolidation by these large industry players, kind of squeezing everybody, and squeezing everybody other than the large businesses out of the game.
definitely. And I think it's absolutely something we have to be on guard and vigilant against. And it comes down to consumers at the end of the day. So you're going to wake up in 20 years and wonder why the world is the way it is. And it's because people spent the money the way that they did. So I think you have to look at how, what we're spending the money on and what we're doing. Um, I, I think a lot of these developments are that they kind of rule out and put out. I don't think they're built to last, right? And I think when you look at a lot of the counties in Ohio, and like you said, who a lot of the main players, when you look at a lot of the who's responsible for a lot of the transfers, especially of these, parcels in agricultural and rural areas where the development is happening, it's all the same characters. So there is a need for for small home builders. One thing I can say is that United Wholesale, our partner, makes it really easy for smaller builders to get set up with them, and allows you to basically do, get your warehouse lines paid off faster, if that's your business, if you're a builder. So you might want to look at getting approved, with UWM, because your clients can go to any number of small independent mortgage brokers and get a deal, which is harder, harder for people to get when you have to go to these smaller retail banks that kind of make up their own rules and put barriers to entry that shouldn't exist. So
Yeah, yeah, it's a interesting situation. A lot of people kind of looking at things where they're throwing their hands up, hey, I can afford a house now, and kind of sitting back. It's slowed down existing home sales as well too. If somebody wants to sell and then they can't necessarily buy because there's low inventory, that kind of puts further pressure on freezing that real estate market. But hopefully here we can see some resolution, some positive things going forward. You definitely need some change, and I always encourage people to go out and that don't just vote straight ticket. Don't just vote for whoever somebody told you to vote for. Kind of research your candidates, talk to the candidates, participate, tell them what's going on. They start to need to listen to what the people are experiencing, because I think what's reported on the media level and the high level, it's not necessarily what the individuals at the local level here are experiencing. It's a little different, as we see. We work more in the day to day, the trenches, so we're meeting these people head on, and same thing. We're also shopping at the same places as people and hanging out with the same places as these people. So we see firsthand what the inflation and the cost of living and everything is kind of doing to everybody's budget.
See, and I think as far as our emergency is concerned, that's that's the real issue. Because if you have a housing, everything I discussed or we brought up just now about a housing emergency has the potential, besides the tax credit thing potentially, but to exacerbate inflation.
Yeah,
So, lowering interest rates, right? It's not like all of a sudden there's going to be more people producing houses, so that's the reality with everything. It's just you're just playing with the numbers on the front end and hoping that it motivates and incentivizes the behaviors and the things you want to see in the economy. And I think that a lot of these things could have really bad unintended consequences. So I would just tell people to be vigilant. If you come across a good deal, and you need to analyze it and check it out, and you need to always think worst case
yeah,
about everything.
yeah.
Truthfully,
Have
so
your team in place already. Most you and I we're more than happy to, even if you were buying a year out. I've talked to clients where I helped a guy. We saw a couple houses. He's still not ready yet. He's waiting for his wife to move in. So there's it's just a matter of time. I'm a patient person. I'm not here, to try and push you to buy today when you're not ready to buy today. So I'm pretty. Yeah, I know you're that way too. So build up a good team. Find the good people who will work for you. People who are going to chat with you. It's sometimes it is a long term game, and you just kind of need to bide your time and work with the best professionals.
absolutely. And I think for us, it's really all about other people. And when you look at a lot of the current events, it just reminds us, reminds me that life is short. And if I do one thing, and I'm sure it's the same with you, Paul, it's we want to educate people and we want to help them, and we want to incentivize them to do that into the future, right? So they remember, hey, these people told me the truth, and they set me up for success, and they can help somebody else do that. And I think that's truly what Americans need to be doing right now. So,
Yeah, definitely. I think that's a good way to end it. So that's all I've got to say today. You got any final thoughts?
nope. Hey, have a great rest of the week, and yeah, we'll see you for the next show.
All right, great. And that's a wrap.